Good evening. My name is Brianna Bacchiel. Thank you for joining me tonight. I am a tax associate with ABC Firm. Tonight I'm going to be giving a federal tax update on the gift tax exemption and how it relates to a recent court case that was decided. On the agenda for this evening, I am first going to be giving an overview on what the gift tax exemption is, also how it relates to gross income. The code sections corresponding to these two items are Code Section 102 and Code Section 61A. These two code sections are key issues that come to light in the court case that I will be discussing later on in this presentation, and it is Felton versus Commissioner, and it was a tax court case that was decided in 2018. So the gift tax exemption is governed under Code Section 102A, and it specifically states that a gifts given are exempt from taxable income, so they are not included, and therefore they are not paid tax on. There are different rules that govern the gift tax exemption, and the Supreme Court has gone on to expand on this definition of a gift and has stated that a gift in the statutory sense proceeds from a detached and disinterested generosity out of affection, respect, admiration, charity, or like impulses. In the tax court case I'm going to be discussing, it deals with churchgoers contributing money towards the church and claiming that they were gifts made to the reverend. Here you can see that Form 1040 has a line that states that wages and salaries are to be included in the calculation of gross income. This is governed under Section 61A1 of the Internal Revenue Code, and this is another fact that is going to come to light in the court case, Felton versus Commissioner. So in this court case for tax years 2008 and 2009, Reverend Felton, who was a reverend who ran multiple different churches, claimed on his 2008 and 2009 tax returns that amounts that amounted to over $200,000 were gifts received by him and therefore exempt from his taxable income. The commissioner found that he had a tax deficiency for these years relating to these amounts and thought that these amounts constituted gross income and should have been included in his gross income calculation and therefore taxed on these amounts. The question in this case is whether these amounts constitute a gift or are they compensation for services by the reverend. The decision came down to this. There were a few different types of contributions made by the churchgoers. They were differentiated by different color envelopes. The white envelopes were made directly to the reverend, and he included these amounts on his income tax returns. These amounts amounted to around $40,000 in both years. He also was given a parsonage allowance for his housing, and these amounts were rightfully included in his taxable income as well. The blue envelopes, however, were made by churchgoers and were expected to be tax-free gifts. The churchgoers knew this and knew that they would not receive a deduction for these amounts, and the reverend also knew that these amounts were to be constituted as gifts and therefore not included in his taxable income. The tax court found that based on looking at these amounts and comparing them, the fact that the blue envelope amounts constituted over 50% of what he actually claimed on his tax return compared to the income items, that when so much money flows to someone who is providing services from the people that he is providing services to, the amount simply must be income and cannot be a gift. In conclusion, the question in this case was whether these amounts contributed by churchgoers constituted taxable income or gifts, which would be excluded. The tax court found that these items were indeed compensation for services and therefore should be taxed as taxable income. When looking at cases such as this, it's important to remember that it is substance over form and that all facts and circumstances are taken into account. Please let me know if you have any questions, and thank you for your time tonight.